We're live. I've always wanted to say that. Cool. Okay, cool. We're live. We like the stock. We like the stock. Yes, I'm so happy to see that in the chat already. Yeah, welcome to the live stream. This is really cool. This is the first live stream I've ever done, so this is going to be very candid, very unpolished. As you can see, we're just gonna be hanging out and talking about this crazy situation going on right now. Oh wow. Oh hey Brenda, what's up? What's up? I think my mom and dad are watching this too, which is pretty funny. So hi mom and dad. This is and check this out. Look at that. We got the Cash College logo on the mic, which is pretty funny. Cool. Yeah. So it looks like we got a bunch of people here. So basically, I just wanted to break down what the heck is going on right now. Talk about what the situation is. Talk about why it's really important, because I believe that this is a massive event that's taking place in the stock market right now, and basically just on like a global scale. This has reached the point where it's affecting you whether or not you even care about the stock market. That's because it has a lot to do with the growing class divides in our society and the growing wealth gap that we're seeing. So this movement that's happening basically through GameStop stock is essentially a movement that's really what it is about. It's about this growing divide between people in society. So basically, yeah, like I wanted to break down what's going on here. So I thought the best way to do it would be to kind of talk about it like a story, essentially, with like I want to go through the entire timeline of events to get you guys up to speed on what's going on with it. I want to talk about who the main characters of this story are, the main players, break them down, talk about the main mechanics going on here, like what a short squeeze actually is, how a massive one like this can actually take place in the market. I want to talk about why this is such a significant event, like I was saying earlier. And then I want to talk about my thoughts about how this is going to affect the future, because I really think this is going to have a massive impact on the future of investing. And I think we're going to see a big shift towards decentralization. And we can talk about that and cryptocurrencies later. So, yeah, basically, I think the best place to start with this story is that I read something that really, really resonated with me. And that's that when the original Occupy Wall Street movement was going on, I read a story where someone was protesting. They were standing in front of Wall Street during those protests, and they remember looking up and seeing essentially some type of traders or hedge fund people. They saw them basically standing on a balcony, and they were holding a champagne glass to these people down below and just kind of like mocking them down there. Um, so you could tell that there was this kind of deep anger that has been, I think, running through a particular portion of society ever since that event took place in 2008, when, as we know, only one person from Wall Street ended up going to jail from that, and basically the government ended up bailing out all of these people. And at the end of the day, who is the government? That's all of us, right? Like, the government acts on our behalf, they represent us. So that was our money that was being used to bail these people out. So the story kind of begins with that anger still that people were still feeling from kind of the ramifications from that event. So basically, fast forward until 2019, and we have the man who I'll just call him DFV, or Deep Effing Value, who I'm sure some of you guys will be familiar with at this point. He, man, he's the legend who's basically responsible for starting this massive movement that started on a Reddit page, and now it's completely taking over the world. But so essentially, He has a YouTube page also called Roaring Kitty that you guys can check out, and he has videos on there. They're really uh, they're funny. You should check them out for sure. So basically, he posted what's called due diligence, or in the community that's kind of known as DD. So when somebody says like, "Hey, I've got like do your own DD," or "I've got some DD on this stock," they're talking about due diligence. And what due diligence means is it's research that they are essentially doing on a particular stock, either for themselves or to share with other people, because they think that something might be a good investment. So this guy, DFV, he did some DD, he did some due diligence on GameStop stock. And the reason he did that is because he was looking for basically value plays in the stock market. And so essentially, some people like to look at stocks that have been kind of like beat up by the market. You know, people think that their businesses are maybe going to become bankrupt, or they'll go out of business or something like that. So people will look for these value stocks that have been beat up, they're low priced relative to other stocks. And then they think that they know something about this stock or this company that other people are missing. So they think that it might be a good investment opportunity because it allows them to buy in at a really low price. The business turns itself around, and then the stock will go up and they'll profit. So he kind of had this idea with GameStop. He thought that, yes, the business was struggling, but there was this big opportunity for the business to be turned around. So he basically posted his position and his research on this stock, and so he was betting $50,000 of his own money, um, basically saying like, "Hey, I'm taking a stock position in this company, so I'm buying stock, but also I'm buying options in this company. I'm buying call options, and that's essentially even riskier bet than stock." So he was placing a couple different bets, some riskier than others, on GameStop being able to turn their business around. So he had posted this on the forum Wallstreetbets. Now, Wallstreetbets is another major player of this story. So Wall Street Bets is a subreddit on Reddit. So for those of you who are not familiar with Reddit at all, Reddit is kind of like a message forum, a very broad message forum. And then Reddit itself is divided up into subreddits. So these are kind of like the sub forums for specific topics. So there's subreddits for news, there's subreddits for politics, there's subreddits for finance, there's subreddits for everything. And one subreddit in particular was created called Wall Street Bets. And the sole purpose of this subreddit when it was created was basically for people to research essentially lottery ticket style investments where they thought, okay, I'm going to YOLO a whole bunch of money on something that's either going to go, to the moon or it's going to go to zero. So it was kind of like a lottery ticket in that sense. Like this is either going to make me rich or I'm going to lose all my money. That was kind of the original idea with Wall Street Bets. And there's a huge spectrum of people on there. Some people are there to just straight up, gamble on whatever everybody else is gambling. Like they'll kind of just follow the trend. Some people are there doing some actual like deep research into stuff. So you have a wide variety of people there. But the idea is that you're trying to make a lot of money with these risky bets in stocks. So this guy posted it on there on this subreddit, and he basically was met with like a lot of criticism at first. Everyone was like, like GameStop, you're putting 50K on GameStop. Are you serious? That's not going to work. Like that'll never work. But he held his position, and he kept, he kept publishing his videos. He kept posting. So he had to take ridicule from people for a while, even on Wall Street Bets. And another important thing to know about Wall Street Bets is they're a community that represents, I think, people who are people who, they're not necessarily the type of people who came from a really strong background in the sense that they're advantaged in life. Like a lot of these people are coming from disadvantaged backgrounds, and the only way that they're going to actually be able to kind of reach the upper levels of society, or reach a level of wealth that many of the, the rich people reach in society, is through these risky bets in the stock market. So they kind of see this as like their only way, their only hope, their only resort of closing that wealth gap that we have in society. So they represent that as well in a way. So basically he posted on this forum, but then over time things started happening to GameStop, the company, that looked like, hey, wait a minute, this might actually be a good play. And one of those reasons was because there was a massive, massive short interest in GameStop stock. Now, this is very, very important. So, in investing, you can both purchase a stock, and this is referred to as going long a stock. So, when you take a long position on your investment, it means that you are purchasing stock as an investment, hoping that it increases in value. That's what most people do. That's what I do, and if you buy stocks, that's what you do as well. But there's another thing you can do in the stock market. You can go short a stock. So we have long and we have short, and these two things are opposite of one another. And that's because when you short a stock, what you're doing is you're betting on the price declining. Now, I'm going to try and explain how shorting actually works as simply as I can. So, if you guys are totally not familiar with shorting, I hope this can help you out with it. So, basically, the easiest way to think about it is like this: it's the exact opposite of buying a stock and selling it at a higher price. Because when you short a stock, you start by selling a stock, but you don't own a stock. So let's say I wanted to short a stock. I have to borrow that stock first from a broker. So they give me this stock. Now I can sell it. I can sell the stock. So let's say the stock's trading at $100 and I want to short it. I borrow a stock from a broker, then I short it. So I sell it into the market for $100. But remember, I'm borrowing this stock. I don't own it. I had to borrow it from the broker. So now what happens is I have to buy this stock back at some point in time because I have to give it back to the broker. But the idea is that I want to buy it back when it's a lower price because I'm betting on the price going down. So I sold it for $100. Now let's say in the market, the stock goes down to $50. This is great for me if I'm shorting the stock because now I'll buy the stock back for $50. And then now I can give the stock back to the broker. And guess what? I just made $50 because I sold it for 100. I bought it back for 50. That's a difference of $50. So I've profited. That's how short selling works. So basically they're betting on the stock going down, and that's how they profit. Now, with GameStop, there was essentially a huge amount of this short interest in the stock. So hedge funds like Melvin Capital, Citron, who I'm sure some of you have heard of. Those are essentially the bad guys in this story. They were massively, massively short this stock. So they had basically borrowed all these shares that then they sold into the market. And when hedge funds do this, when they're so massively short stocks, to this point they were 140% short the entire float of the stock, which is crazy that that's even allowed because that's essentially just like synthetic leveraged shorting, which I'm not gonna, get into explaining, but essentially they were leveraged, like more money than they essentially had. They were shorting the stock. And so what this does is it actually can put massive downward pressure on a stock because it's supply and demand, right? Let's imagine in your neighborhood, 100 pizza shops opened up and they're all selling pizza. What's going to happen to the price of pizza? It's going to go down because they're all trying to undercut each other, right? So the stock market works the same way, supply and demand. And if you're massively shorting something, which means you're massively selling this stock, you're creating a whole bunch of supply. So you're pushing the price down. So they can kind of manipulate the market in this way by taking massive short positions. So they were suppressing the price of GameStop a lot. Okay, so that's that part of the story. But now people on Wall Street Bets were basically discovering that, hey, wait a minute. So this DFV guy, he has this thesis about GameStop turning their business around, and there's 140% of the float of this stock sold short. If we all buy this stock and hold it, like if I buy this, if somebody else decides to buy it and another person decides to buy it, and we all just hold it, wouldn't that cause a massive short squeeze in the stock? Okay, so now let's explain the short squeeze because that's the big thing. That's the big payoff. That's the mother lode. That's the MOAS of this whole situation. So a short squeeze happens to a particular stock when essentially these hedge funds, these financial institutions who have a bunch of these shares sold short, remember, they're borrowing the shares. So they have to buy back the stock to give it back to the brokers who they borrowed it from. So if you can basically force these people, these hedge funds, to have to buy their shares back, like rapidly, all at once, what it does is, remember how short a massive short position pushes down the price of the stock? Well, reversing that position is going to have the exact opposite effect. It's going to massively shoot the price of the stock way up because they have to buy so much stock back to cover their short position. So that is beginning to happen. I believe that has started to happen, and that's why we've seen the price of GameStop increase from, I think it was at like $4 or $6 at some point earlier this year, and it has shot, up to like 300 and something now. At one point, it was close to $500. Like, this is an insane increase in the stock. But the thing is, this isn't over yet. This isn't over yet by a long shot, and that's because according to the estimates we have access to, the data around short interest on stocks is not necessarily 100% reliable, but, what we can see right now, it looks like there's still, probably around 100% of the stock, sold short still, which means there's a ton of shorts that still need to recover their position at this point, which means that the short squeeze is still on, and as people are saying, the squeeze has not been squoze, which is one of the funniest phrases I've ever heard. So the squeeze has not been squoze, and it can still be squoze, um, unless there's some kind of intervention in the market that happens, which leads me to my next point. So on Thursday and Friday, Robinhood, which is one of the main trading apps, probably the biggest free stock trading app. They decided to limit people from being able to buy GameStop as well as some of these other meme stocks that have been running as well because of GameStop. So on Thursday, they straight up prevented people from actually placing buy orders in the stock. I have never, ever heard of that before. I have never, ever seen that before. Like, I don't know if that's legal, but, like, I would hope that it's not. I know that the SEC is actively looking into this, but that if there was, like, a powder keg waiting to explode, that was the match, because now the internet has completely gone berserk and been like, "Are you serious? This is such, like, market manipulation," because it looks very much that Robinhood and perhaps some of these other brokers, because there was other brokers too that limited, trading for these stocks that day as well. It looks like the hedge funds like Melvin Citadel, the market maker, it looks like they have their hands in their pockets and they pressured them to basically turn off trading. But there also has been some talk of basically it being to do with clearinghouses and stuff like that. But this whole thing stinks. This whole thing stinks really bad. Like something isn't right at all. So that was really what set the internet off. That was really what I think blew this thing up completely because it was like 2008 all over again. There's all these retail traders and a retail trader is just, it's you or me. It's just your average person who's participating in the stock market. We're not hedge funds, we're not investment managers, we're not, big financial institutions. We're just people trying to invest our money, trying to grow it, trying to have a better life. That's retail investors. And this whole thing basically represents retail investors getting screwed over massively. So now this has turned into a huge, huge movement with people like, I saw a tweet from like Ja Rule saying that this was crazy. Like everyone who you wouldn't even think is even remotely watching this is tweeting about it. They're interested in it. This is a crazy movement. And now, so basically, the way this is working is people are just buying GameStop stock and they're holding it. They're holding it with diamond hands, which basically just means you can think of it. There's like two main opposing sets of like figurative hands you can have. You can have paper hands, which are the weakest type of hands because they're made of paper, which means that like you sell stocks really easily. You get really scared in the stock market. And then you got diamond hands. So these are the hands that are made of diamonds. They're the strongest hands you could possibly have, and they never sell the stock. Like they're holding till death. So that's what everyone's trying to have. Everyone's trying to have diamond hands because the longer everybody holds GameStop, the stock, it's basically like this Mexican standoff where it's, the retail traders holding the stock and these short sellers who need to buy the stock back, but they can't buy it because like we're all holding it right now. And if they exit their short positions, then the price goes way up and they lose billions of dollars. And at this point, they've already lost billions of dollars. They've had to get bailed out. They've had to, get emergency cash injections at this point. So this is essentially like a war between retail and between Wall Street, and the war it's still happening. This thing isn't over yet. So next week's gonna be crazy to see what happens, because there's a chance that people like the SEC steps in on this and just halts trading in GameStop altogether. But if they do that, I think that retail investors are just going to see that as more market manipulation and they're going to freak. They're going to freak out. So this is an extremely volatile situation that's happening right now. Like, and one of the main things that's being said right now is that this isn't about the money. So yes, like Wallstreetbets, is a community that was yeah, it was really about making big bets to make a lot of money in the stock market. But that's not what this is about. This isn't about greed or making a ton of money necessarily. This is about sending a message at this point. Like this is why people are getting involved with it because it's about sending a message. Like people are fed up, they're tired, they're angry, and they actually want to, see some change. They want to believe that retail investors aren't getting treated like second class citizens compared to hedge funds and institutions who get all these breaks in the market, who the rules don't seem to apply to them. And then, it would be like, imagine this. Imagine you're playing like video games with your friends. And your friends were way better than you at the video games. They're always beating up on you. But then one day you actually start to beat up on them. And you know what they do? They pull that game cartridge right out of the game and say, "No, we're not playing the game anymore." Like that's pretty much what's happening right now. Like hedge funds and institutions can make all the money they want. They can short all the stock they want. They can use all the leverage they want. They can twist, bend, even break the rules a lot of the time. But as soon as a retail trader puts them in a crazy position, that's when they're like, "No, we got to shut down the whole game at this point." And that's how a lot of people are perceiving this right now, and that's why it's reached such a massive, level, basically. So, um, now I wanna talk about, like, why I believe this is an extremely, extremely important event. I think that what I kind of touched on earlier, there's, like I think especially what's happening with the pandemic right now, there is clearly, a massive wealth gap that is growing. And that's between people who are like savers versus investors, people who are working class versus the people who still have their jobs right now. They're working from home, they're still collecting big paychecks, and they're saving a lot of money because they're not spending it on stuff like the top 1% of society is not at all negatively affected by the pandemic and everything going on, whereas you have a large subset of the population that is massively affected by it. So there's this growing gap there. Um, and a lot of those people who are not negatively affected by it are the people who are in these hedge funds, these institutions, this kind of like old guard of the financial world. So you have this new group of people who are coming up and they're labeled unsophisticated investors. They're talked to as if they're stupid. They don't understand. Like, what kind of investing are you doing? Like, you don't look at the fundamentals. You don't understand the fundamentals. What are you doing? Like, they're talked down to, and they're meant to feel like second class citizens. They're meant to feel like they're alienated. Like, they can't participate in the stock market. So they're rebelling against that, and they're saying, "Yeah, actually, we can, and guess what? We can make a lot of money too without following all of the same rules that you think I have to follow." Like, the stock market should be free, and it should be for everyone. Like, the fact that we have to rely on the stock market, basically for our retirement, for like if we ever want to put our feet up at one day in the future, right? Like, we're expected to invest our money into the stock market so that it can grow and pay for our retirement. But if we're going to play that game, the game has to work for everybody. It can't just work for the biggest institutions and the hedge funds and the market makers. No, it has to work for everybody. So yeah, it's crazy. Like, what we've seen right now is a coordinated, like, essentially media attack. Like, you can tell which media outlets are strongly opposed to this movement, and who clearly are kinda siding with the Wall Street side of this thing, and that media is gonna lose all of us in the future. Like, as we grow and continue to take more of the market, and as the younger people grow and continue to be, the next wave of investors, that old media is gonna get pushed out. We're not gonna watch it. We're not gonna listen to it. We're gonna have our own media. We're gonna have our own like, it's gonna change. It's gonna change. And if they don't realize that, and if they don't start understanding what's going on here, and to actually appreciate this other subset of investors who want to participate in the stock market just like everybody else, it's not going to go well for them. It's just not. Um, so I think this has really big impacts on the future of investing, because the kind of timeline of how investing has progressed is back in the day, just your regular old average person had a really hard time accessing the stock market. You usually had to go through, some kind of stockbroker or financial advisor who would then be your gateway to the stock market, because they thought a regular person, like, no, 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 like, you need my help to invest your money in the stock market. You don't know what you're doing. Like, you don't understand this. Let me help you. And in exchange, they would take a big cut of your money to do so. So that was like the old way of doing it, and a lot of people still do that today. But then it kind of progressed a bit more once, the computers kind of came around. Once knowledge was shared a little bit more freely, you had more everyday people who would get interested in the stock market and would participate in it. But there's still a lot of barriers to entry. But now we've gotten to a point in time where almost anyone can participate in the stock market, because you can just download an app on your smartphone and open your account in a couple minutes, deposit a couple bucks, get started. You have pretty much the same access to information as everybody else. You can like the playing field has completely leveled at this point, almost. Like it's really, really close. So you have these retail traders who can compete and punch way above their weight, and they can go head to head with a hedge fund analyst like any day. So that's going to massively impact the future of investing because these the old way of trading was so much based around company fundamentals and like discounted cash flow analysis, dividends, all this stuff, because that's how people thought and were taught that that's how you participate in the stock market. That's how analysts participate in the stock market. But now you have these people who are going to be participating in the stock market just because, they like the stock, they like the company, they like the idea. And it's going to be a lot more about group mentality and investor psychology than ever before. Like that's going to be a huge, huge trend of the future because there's just this increased access to the stock market. And what I'm really afraid of happening here is regulations coming in that hurt the retail investor or that basically speak to them as if like, you know what, you're too unsophisticated. Like what you've done here with GameStop was crazy. It was dangerous. Like we have to limit your access to the stock market. I really hope they don't decide to go that route because that's just the wrong direction in my opinion. I think if anything, they need to do more to increase transparency in the stock market around on the Wall Street side. They need to increase transparency on that side, maybe more regulation on that side. They need to support us in the stock market. They don't need to restrict and regulate us. We need support. That's what needs to happen there. Um, okay, let me just check the chat here quickly to see if there's any pressing questions or anything like that. No, it just looks like a good discussion. Nice. Keep it up. There's some earlier. Oh, was there? Okay. We can do questions soon. Soon. One other thing I really want to talk about here. I believe that this is going to have a massive impact on decentralization and cryptocurrencies. And that's because what's happening now with Wallstreetbets is a decentralized movement by definition. Like Wallstreetbets is a banner, but it's not as necessarily like a group. Like it is a group, but it's more of like a bunch of different people united under an idea as opposed to being like a part of the same company or whatever. It's not a centralized entity, and that's because nobody owns Wall Street Bets. It's just a bunch of people coming together with a shared vision, shared idea. That's what decentralization is. Like I remember it was crazy like when this was first starting to happen, like when the US markets would close, then I'd see a post from like someone in Europe who'd say like we're here to pick up the rest of the fight because the European markets were opening. So then you'd have people who are like Germany checking in here, like Poland checking in for the fight, and then you'd have like Japan checking in. So you had all these people from all across the world who were all buying GameStop shares. Like this was not limited to just Wall Street Bets, even the subreddit. Like there's Bay Street Bets in Canada. There's like a German version of the subreddit. Like there's all these groups of people were coming together under the shared idea. And that's the reason this could not be stopped because it wasn't a coordinated effort by one company, because that would be illegal. This wasn't illegal. It's not. It's not illegal to do this. And that's why you see the meme of people saying like, we like the stock, we like the stock. It's just because like, hey, like I just happen to like the stock. That's why I'm buying it. It's kind of like the funny, shtick that's going on with it. But yeah, this is a decentralized movement, and that's why it can't be stopped. And I think a lot of these people who are so frustrated right now with the status quo, with the way things are run, if they don't already know about decentralization, and kind of the movement that cryptocurrency is currently fighting for, they're going to learn about it and they're going to find out about it and they're going to say, hey, wait a minute. this is a lot like what we're trying to do. And so I think there's going to be a lot more adoption and a lot more interest of that type of stuff like DeFi, decentralization, decentralized finance, Bitcoin, Ethereum, and other cryptocurrencies as well. I think that that's going to set in motion a big trend. We saw Elon Musk put hashtag Bitcoin in his Twitter bio. That was a big move. A lot of other people followed suit. Jack Dorsey, CEO of Twitter and Square, has already had it in his bio for a long time, and he put a lot of Square's, well, not a lot, but like 1% of their cash of Square into Bitcoin. And if like Tesla did that too, if other companies start doing it too, it's gonna be really interesting. Gonna be really interesting. So definitely keep your eye on that. And I'd be happy to answer questions about that as well a little bit later in this thing if you guys have questions about that. Um, so yeah, like my thoughts on this whole thing in terms of my participation in it. If you guys saw my last video, then you know that I bought one share. I've since bought one more share because first of all, it's money that like I don't care to lose. I really don't care to lose. And again, this isn't about the money for me either. It's really not. Like it's also about sending a message because I come from you know, I was in training to be a financial advisor. I thought I wanted to be somebody who participated in the financial industry in a professional way. Like I was pretty much done my financial advisor training. I did my CSC exam. Like I was really close to getting essentially paired up with a mentor who was going to give me a portion of his book, like probably like a six-figure book for me to start managing. And I had just seen so much stuff in my training that frustrated me so much and just made me feel so not good about doing it. Like that I was like, "No, this isn't right. This isn't what I wanna do." Like and not every financial advisor is like that. Not every investment firm's like that. There's a lot of, fee-only advisors can be really good to work with because 'cause they're very transparent. They charge you, like, an hourly fee to work with. That's totally cool. But where I was, you know, it was not. It was not like that. It was about getting huge fees from your clients for investments that, you'd be way better off in an index fund, and, like, anybody can buy an index fund these days. It's not good. It's not a good industry for the most part. So I I really support I really support this movement. I really believe in it. So that's why I have a couple shares and I'm not selling. I like the stock. I'm not selling. um yeah, it's not about the money. It's about sending a message. And so but with that being said, for those of you who, maybe haven't bought a stock in GameStop yet and are thinking about it, um, you know, I would definitely say like a few words of caution here because like I've seen some posts of people who are like dropping their life savings into it. And while I appreciate like the sentiment of that, it's it can be really dangerous if because this thing could go really bad too. Like we don't know. There's a huge movement behind it, but like this thing could go bad too, and you could lose a lot of money. So definitely, definitely, definitely do not put in anything more than you are willing to lose 100%. That would be my words of caution. I feel like I have to say that. But other than that, like you really got to make up your own decisions. Like I'm not gonna be your dad. I'm not gonna tell you what to do. I've told you what I've done. Um, and yeah, like I'm okay losing that money for sure. Um, and yeah, I think that's probably my main spiel about all this. So let's see if you guys have any questions about all of this. It can be about GameStop, can be about Wallstreetbets, what how the short squeeze is working. Okay, we got one. We got one from my brother. Is placing a limit buy over the weekend for both EMC and GME a good or bad idea? A limit buy, yeah. Yeah, I did. I would say, yeah, like, see, the tricky thing is, like, at open is when, like, a massive moves happen within the first, like, 5 minutes or so. That's when the stock's gonna go crazy. So, with a limit buy, at least you do protect yourself from buying at way too high of a price. So, definitely, anytime you're considering buying into this thing, definitely place a limit order. Do not place a market order. Do not place a market order, because you may get filled at a price that's extremely high. So, definitely set a limit order. And what I would do is I'd kind of watch the pre-market trading. Watch the pre-market trading that's happening Monday morning. See where it's kind of is about, and then you can kind of make an educated guess with your limit order of where you want to buy it. But once the market opens, it can totally shoot way up or it can shoot way down. It's really hard to know, but yes, 100% limit orders for sure. Um, Projections for how high this thing can go when a squeeze happens. Whew, well, a lot of people are comparing this to, like, what happened with, Volkswagen, and what happened with Volkswagen is for a moment in time, they were the most valuable company in the world when they had their short squeeze, and if that happened to GameStop, I believe each share would be worth something a bit over $30,000. Now, I have no idea if that's gonna happen with GameStop too, um and keep in mind that if there is crazy, crazy massive volatility, there's gonna be halts. There's gonna be trading halts that stop the stock. They may even stop it for a day. So this may, if once it starts to rocket, if it does, it may play out over several days. Um, so I don't think it's gonna be a situation where, like, it happens in 10 minutes and you have to get out. Like, I think it's gonna last a while because of how many halts there's going to be. Because when there's really volatile trading, they do halt the trading of a stock to just give it a sec, let everybody decide what to do. Um, so yeah, like, I don't know. I don't think 1,000 is unreasonable if it actually starts to short squeeze, and if it does, like, I don't think 5,000 is even unreasonable. Like, I think sky's pretty much the limit, like, because there's such a massive short interest. And this is unprecedented too. Like, I don't know. I don't know where this could shoot to, but it could be insane. Could also end up very badly though, so keep that in mind. Okay, let's see what else we got here. Uh, what do you think will be the retaliation by hedge funds, governments if more decentralized finance started to happen? Yeah, that's kind of the thing, right? Is if things like Bitcoin and DeFi grow in power more, they, like, Bitcoin directly undermines, like, the central bank. So a lot of people kind of see it like they think about it like game theory, sometimes like a prisoner's dilemma. And essentially, the central bank kind of has a couple moves. They can choose to accept and embrace something like Bitcoin and put it into their reserves and say, like, "You know what? We're gonna use this thing. We're, like, gonna allow everybody to use it. It's gonna become, you know, a store of value for us." Is that likely? I don't know. It seems a little, far-fetched to believe right now, but also, what's the alternative? Do you make it illegal to own Bitcoin? They did do that with gold at one point. They made it illegal to own gold. You had to hand your gold in for US dollars. I think people would go crazy if they did that, and there would be so much backlash. They could also decide, say, "You know what? We're gonna tax your Bitcoin like 90% on capital gains or something, or if you spend it." That's another thing that could happen too. So I think, yeah, I don't know, like, the more it grows in power, it's kind of like either you embrace or you try and stop it. And which way that goes is anybody's guess. There is a lot of people coming into, the new guy coming into the SEC. He literally taught a course on Bitcoin and blockchain. So he knows all about it, and he may even be pro Bitcoin. There's somebody else going into the OCC who is, I think, pretty pro crypto. Now Janet Yellen at the Fed, um, I I wouldn't say she's pro Bitcoin. Doesn't look like that necessarily. She's probably more on like the anti side, but some of her remarks I saw looked like she wasn't like it looked like they want to kind of regulate it and try and allow the positive sides of crypto to keep working and to try and maybe limit some of the more illegal activities with crypto, which aren't even really happening. Like a lot of people say that about crypto, but it's such a small percentage of illegal activity that happens with crypto. And meanwhile, you have US dollars, where a massive amount of US dollars gets used for illegal activity. So it's kind of hypocritical there. A lot of questions about AMC. I don't know. I'm not gonna say one way or another on that one. Like it's anybody's guess, anybody's gamble on that. Do you still day trade? No, no, I don't day trade. Like I don't actively buy and sell stuff really quickly. But I think this year I might be a little bit more active with my investments in terms of probably buying like good companies at good prices because I think the market's going to be a lot more volatile. And in more volatile markets, it's easier for active investors to do better. I'm still definitely mainly a passive investor. Like 80 to 90% of my portfolio will for sure be in passive investments because that's just what's going to perform best for the long term. But I think over the short term, in really volatile markets, like I think we might see because of all this crazy stuff, um, you can pick up some really good companies at some good prices. So it's kind of hard to resist not doing that. Is it too late to get into crypto? I really don't think so. As long as you're in it for the long term, as long as if you're willing to hold it for like 10 years, I don't think it's too early at all. I think there's still so many people who don't know about it, they don't understand it, they think it's like a nefarious, bad, scammy thing, and because of that, because it's still in, like, an early adoption phase, I think it's still early, provided you have a long time horizon, and it's going to be a very volatile ride, very bumpy. It can drop in value, like 80, 90% drops have happened, so just keep that in mind with whatever you're thinking of doing. It's gonna be a bumpy road, but my personal opinion is that it's not too early. Do, 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 do. What else do we got here? No, I'm not gonna buy AMC. I'm just doing the GME thing for me. Okay. Do you spend a lot of time doing TA? How do you analyze your trade setups? I wouldn't say I spend a lot of time doing TA. Like I do look at like support and resistance levels, but I don't put like a ton of emphasis or faith on those. Like I it's usually like, if it, buy the dip, like it's a phrase because that's kind of the strategy is when there is like a sizable drop, when there is a lot of fear around something, when you feel like it's kind of unnecessary fear. I always use that as a buying opportunity. Like when I feel scared about something, when I think, oh my God, this, like, let's say it's dropped 10%. And then you feel that fear, like you feel like, oh my God, what if this keeps going lower though? Maybe I should wait to buy it then. That's usually when I buy. And that's worked out really well for me because that's usually pretty close to around where bottoms happen, unless there's a serious problem with a company or with a stock. And then you can be on the wrong side of that trade also. But that's why you want to make sure, you look at the news, look what's actually happening, make sure there's not a serious problem. And it's just kind of people being emotional. You want to take advantage of those emotions. Do you think Bitcoin is overvalued? I'm more interested in Ethereum lately. I really don't. I really don't think Bitcoin is overvalued. Like, I would say I'm like a pretty big Bitcoin bull. The more and I've had to do a ton of education on it for myself because it's such a complex and deep topic. Like, I still have a lot to learn myself, but I feel pretty confident in saying that as long as it doesn't get rejected or shut down by governments, I don't think it's overvalued at this point, relative to assets like gold and relative to assets like the entire, like, monetary supply. But you have to think really long term, I think, with crypto. It's a very long-term game because it's world changing. It's, like, paradigm shifting. It's society changing. So it's gonna be long, it's gonna be messy, but I feel pretty confident about it. I do. Duh, duh, duh. Do you think broker apps like Robinhood actually stopped trading because of liquidity issues, or maybe there was a conflict of interest or both? I think it's pretty clear that Robinhood stopped trading because of liquidity issues, and the fact that, like, their CEO just couldn't admit it makes it like it makes it stink. It makes it smell bad. Like, his interview, I don't think was transparent at all. And then if you compare that to the interview that, like, the CEO of Webull gave, or M1 Finance, or some of these other brokers, like, they just straight up said, "Yeah, our custodian told us you have to shut down trading of these stocks because we cannot process these trades for you right now." Because I think GameStop was pretty much at the point where they might have blown up the entire stock market because of how damaged these hedge funds were and how much losses were going to have to be absorbed by clearinghouses and stuff like that. I seriously think that this exposed, like, a massive systemic risk in the stock market, and I think that that risk got passed along to, the custodian, clearinghouses, then it got passed to the brokers, and then it got passed on to us. But the fact that Robinhood just didn't say, "You know what? Yeah, we experienced, a liquidity issue, or we experienced an issue where our custodian clearinghouse or whatever told us that we had to stop processing the trades." Like, they said that they decided to do it preemptively and that it was their own decision. I don't know. Like, why did you get $1 billion emergency cash injection then? Why are these reports that you're drawing on your credit lines then? Why did you shut down trading in 50 more stocks then? It doesn't smell right. It doesn't. Would you go 50/50 on BTC ETH for your crypto portfolio? I am, for mine, I'm like 80/20, Bitcoin and Ethereum. Um, and that's because I still have some questions about Ethereum for me. Like, I really think it's cool. I really, really like the idea. I think it can be massive. What I still need to learn more about for myself is understanding how high Ethereum prices impact gas fees on the platform, and if, like, a high Ethereum price has a chance of messing up the Ethereum platform because Ether's used to pay for, gas in a certain way. And I don't know, maybe there's somebody on here in the comments who can clarify that for me, but that's still something I need to research. So that's why I'm a little bit more cautious with my Ethereum, allocation. Also, on top of that, though, um, because I think Bitcoin's just more widely adopted at this point, like, companies are moving their balance sheet into it, so, and a lot of institutional money is holding it. I think that it's going to be more stable in that sense because there's more adoption of it. But on the other hand, I think Ethereum then has more room to run than Bitcoin. I think Ethereum could see bigger gains as opposed to Bitcoin at this point. So I see Ethereum as like a higher risk, higher reward type of bet, and that's why it's a smaller part of the portfolio, because as something that's small, it exposes me to less risk. But if the reward's good, it can still be a really nice reward. So I'm protecting myself, but I'm also still exposing myself to the potential of a good gain off that. But I don't plan on like really trading or selling crypto anytime soon. Like I'm a holder for a long time. Uh, yeah, Robert Breedlove is really cool. For those of you who are starting to learn about Bitcoin, crypto, that stuff, check out Robert Breedlove on Twitter, YouTube. Super smart guy, like super smart, really interesting person to listen to. Low cap crypto blockchain stocks. I'm not sure. I'm not sure about that, honestly. I haven't really looked into that. Coinbase is going to be IPOing, but that's probably not going to be a low cap stock. I'm sure that's going to get a lot of attention when that IPOs. But yeah, I'm not too sure about that personally. What is the worst case for hedge funds if the squeeze happens? We've seen 2 buyouts. What does the battlefield look like when the smoke clears? Yeah, that's a great question. Because they have billions of dollars of losses at this point, and if they were like, see, that's where this is posing, I think, some pretty big, like, structural risks to the stock market, because part of the reason why the market collapsed in 2008 is, like, Lehman Brothers was, I'm pretty sure they were a clearinghouse, and part of the reason the entire market collapsed was because they collapsed. So you can sometimes have these like scary domino effects in the stock market where if certain big players collapse, that can then bleed into other players who collapse. Because it basically results in like when you buy and sell shares on the stock market, people have to ensure that somebody else gets those shares and somebody else gets the money. If that stops, the market's broken and it collapses and falls apart. That's why there's so much. That's why like the Biden is literally looking into this right now, because I think there is a bit of a risk of like some serious structural things happening right now because this is so crazy. But yeah, I mean, ideally, what would happen is the hedge funds kind of just go bankrupt, and um, they. But yeah, I don't know, because if they can't afford to buy back all their shares, I honestly don't know. What would happen in a situation like that. I'm not sure. What if GME dilutes their shares, then use that money to change the fundamentals of the company? Yeah, so I mentioned that in one of my videos. I think that would be a great move for them. Like, it would be so, funny. One of the things, though, is that there's a board agreement I found out that they can only sell up to $100 million worth of shares. So that's, it's pretty good money, but it's not, as nice it would be to raise, like, 1 billion or more. But I think they could change that agreement pretty quickly. And, yeah, if they were to raise a ton of money and be like, "Okay, let's switch the model, let's go full online, let's, like, do all these things," it would be so funny if this, like, 5, 10 years into the future, if GameStop was, like, this, like, super sick gaming company that everyone used and bought from and wanted to own, like, and this was what turned it around for them. It would be really funny, and I kinda hope that happens just because it would be such a cool story. But yeah, I think they could. I think they could, uh sell a bunch of shares right now, raise a ton of money really cheaply, really easily. That's what Tesla did. That's exactly what they did. Massive short squeeze. Tesla announces raising 5 bill. They raised money like a couple times in 1 month, and then used it to just further finance their business and grow. It was an awesome move. Yeah, it was sick. Let's see what else we got here. Do you believe that the pump and dump schemes trying to piggyback off the GME craze are going to be conflated? I've seen bots trying to push trash investments everywhere. Yeah, I'm scared of that. I'm scared of stuff getting like actual pump and dump or actual market manipulation getting paired with the GME thing, because the GME thing is not that. But I'm scared if they try and lump that together. Like I saw some news outlets basically trying to like smear the Wallstreetbets crowd and call them like alt-right and all this stuff like that. So yeah, I'm kind of concerned about the media trying to pair actual illegal activity with what's going on with GameStop. I could see that as a tactic for sure. Whether it would hold up, I think if anyone actually scrutinized the details, they would see that it doesn't hold up. Is it allowed to promote stocks in here? I would say probably not, probably not. Yeah, probably not. Will GME go to 5K? Is the squeeze close? I don't think the squeeze is close. I don't think the squeeze is close. I don't know if it'll go to 5K. I don't know what'll happen, but I don't think the squeeze is close. Do you think Wealthsimple robo-advisor is worth the point 0.5 fee, or would an ETF like XGrow or VGrow be more effective? Yeah, that's a great question. So I use both personally. Like I have some long-term money that I just like don't want to think about, don't want to worry about. And I just leave that in Wealthsimple Invest. And I pay that 0.5% fee because I think it's really low and it's just really easy autopilot investing. But with that being said, I also, hold passive investments myself, and I also sometimes buy individual stocks myself too. I think the main question you have to ask yourself is, will you commit to your own portfolio enough? So, like, are can you trust yourself basically to say, "Okay, every month I'm gonna put 500 bucks into XGrow or VGrow?" If you're like, "Yeah, 100%, that's no problem, I can do that," then yeah, just do that. Just use, like, Wealthsimple Trade and just buy XGrow or VGrow every month because 'cause it'll cost you nothing in fees. And yeah, but also keep in mind, like, then you're kind of on the hook for getting scared about selling in market crashes and stuff like that. So you want to make sure that you're committed to your plan and you're sticking to it. You're not going to sell when you get scared, and you're just going to kind of contribute to it. So if you believe that you can do that, I would say go for VGrow XGrow. But if you're like, I don't know if I trust myself, then Wealthsimple Invest, I think, just kind of solves that problem for you. That's kind of how I would decide between the two. Overall market effect if they liquidate other securities to pay for losses on the squeeze. I think we're already seeing it. I think that the past few days has actually been a lot of liquidation, because the stock market's been going down while all these meme stocks have been ripping. And I think that could continue into next week. Like, obviously, nobody knows, but I wouldn't be surprised. I wouldn't be surprised to see the market continue to react to this. If anything, because of the uncertainty it creates, because of the emotions it creates. Like, if you look at the VIX, for those of you who don't know what the VIX is, it's the volatility index. You can just go onto Google, type in VIX, and what that shows you, it's kind of like a fear gauge in the stock market. And when the VIX goes up, that tells you that people are feeling more afraid in the stock market. It essentially tells you that people are hedging their bets more, like they're buying more put options on things like the S&P 500 because they think that there's a chance that the stock market might go down. So the more that goes up, the more people are afraid. And right now, it's pretty high. It's pretty high. So I think people are afraid. And when the VIX is up, the stock market does tend to have bigger moves up and down around that time. Obviously, we don't know. We can't predict anything. But that's what kind of tends to happen when the VIX is higher like this. Um, how do you think this will affect market confidence? I think it's going to affect it big time. I think a lot of people are going to be not confident in the stock market, especially young people, especially the younger generation, especially people who are on Wallstreetbets, especially people who are kind of first-time stock buyers using Robinhood. I think this event is going to, like, put a scar on them for life that they will remember. They will perceive the stock market as this thing that is, is not a free market, that is gatekeeping them, that has this negative perception. So I think that they'll think about it that way, until they see some kind of change that makes them then believe and have more confidence in it. But I think, that might also turn into them wanting to almost take, like, revenge at the same time, like, wanting to earn a lot of money in the stock market to, like, stick it to the man and stuff like that. So, I think paying attention to the new generation of investors is super important because 'cause I've never seen anything like this. Like, when I was growing up, like, I was I think I was the one out of all my friends who was most interested in the stock market, by far, and I had nobody to talk to about stocks, but now you see this younger generation who's getting on Robinhood, putting a couple $100 into stocks. They love it. They're excited about this, like, they love it. They're interested. They're engaged with it. That's gonna change things, for sure. For sure it will. What platforms you use for crypto? So I've used 2, and I'm in Canada, so keep that in mind. I've used ShakePay and I've used Newton. I like them both. ShakePay actually allows you to, like, shake your phone, and it gives you, like, a little bit of, satoshis every day, which is kinda cool. Newton has lower spreads, though, so I use them more, which means basically your trades get executed cheaper on Newton, and they allow you to buy more cryptocurrencies than ShakePay. But I like them both. I would recommend both of them, but if I had to choose one, I would choose Newton for me. But also keep in mind, it's very important for those of you looking to get into crypto. Look into wallets. Look into hardware wallets or software wallets because if you're planning on holding your crypto, you wanna transfer it out to a wallet, because there's a phrase in the crypto community, "Not your keys, not your coins." Something like that, I might have messed it up. But basically, the idea is you wanna actually have possession of your Bitcoins, of your Ether, whatever it is. So you need to transfer it off these exchanges and onto your own wallet. Now, I'm not gonna explain, wallets because and all this stuff because I think that'd take a lot more time, and I don't know how much longer I can hang out on here, but, look into that. Look into hardware wallets, software wallets. I can probably also make a video on that if you guys are interested and kinda break down the whole buying process of how to safely do it, safely keep it, safely secure it, because I think that's really important. Uh, where do you buy your plain shirts? They look good. Oh, that's so funny. Okay, so I'll give you guys a secret here. So obviously, I like to live pretty like I guess like frugally is the word, but frugally kind of sounds like a weird word. I don't know. Like I like to not spend a lot of money on things if I don't have to, right? Trying to save a lot, financial independence. But these shirts are literally from, Gildan, the generic clothing company, Gildan. I order them off of tshirt.ca, for, like, $5 each, and guess what? Here's the reason why I buy them, though. They're 100%, like, ring spun cotton or something. I don't know, like, it's a high quality cotton that's soft, and it's 100%. They fit me great, I think they look great, and they're insanely cheap. Like, if you buy a shirt from somewhere like H&M or somewhere else like that, it's gonna have, like, a lot of acrylic in it, and you might spend, like, I don't know, like 20, 30, 40, $50. This is a much better quality shirt. It's $5, and I really like it. So, yeah, check out, Gildan shirts. But here's the trick, though. You need to look at the ones that are called, hammer. You want the hammer ones because those are, like, the heavyweight cotton ones, okay? That's my pro tip. They're great shirts. They should sponsor me or something. Dig your interior design too. Thanks, that was all me. That was all me. Yeah, it's Justine in the background. She's done all this stuff. Is it better to invest in an ETF blockchain technology than Bitcoin stocks? So the pro side of investing in an ETF is that you can hold it in in a tax advantaged account. So you can hold it in a TFSA if you're in Canada, or I believe you should still be able to hold it in like a Roth IRA if you're in the States or wherever you're from. If you have a tax advantaged account like that, it's like a tax shelter. So you can hold it in those accounts. And then if all your gains, you don't have to pay those taxes on. Whereas just normal crypto, like the Bitcoin that I own, if I sell that, I have to pay capital gains taxes on. So I actually do have some Bitcoin and Ethereum ETFs in my TFSA. So that way I don't have to pay taxes on that at least. The only downside is you don't own the actual cryptocurrency, right? Because the ETF is holding it on your behalf. So the hardcore crypto people will tell you, again, like not your keys, not your coins. They want to own the currency. But I think investing in an ETF is totally fine, and you get that tax advantage too. We like the stock. We like the stock. Do you think GME has turned into a social movement? 100%. 100%. This is the craziest thing I've ever seen in investing. This is the craziest thing I've seen in my life in a long time, for sure. Why haven't Questrade and other low-cost brokers tried to compete with Wealthsimple Trade yet in the same way that Robinhood caused? Yes. That's a good question. Questrade's pretty good because they allow you to buy ETFs for free, and their commissions are lower than like people like TD or some of the other major brokers. But yeah, it's kind of crazy that in Canada, something like Wealthsimple Trade doesn't have more competition because they're just eating it up. They're eating up the market share having free Canadian trades on their platform. And if they manage to secure free USD trades as well, which I think they're working on, I'm not sure how they're going to do it, but I think they're trying to do it. If they do that, like it's over. Why would you use anything else? It would be the free stock trading app in Canada. Like there'd be almost no reason to use anything else at that point. So they might completely grab all the market share if they do that. That's like the last domino that has to fall. But I don't know why Questrade's been kind of slow to compete in that way. I think they're kind of just like a bit of a older, more traditional company, whereas Wealthsimple is like, I think it's clearly defined itself and it clearly has this new wave of investor mission behind it. And that's why I really like them. Should we move out of Robinhood? I would like if I was using them at this point, I'd be like, I'm not using them anymore. But something I've seen that's really important is like if you have stock with them right now, keep that there. Don't like process a transfer out of it. Wait till this is all over and then process your transfer out because I think your account gets like frozen for a bit of time. So if you have GME shares right now and you try and transfer those out to a different broker, they might kind of get stuck in limbo for a little bit. And if you want to sell them at any point, you won't be able to. So I would say like open up another account at another broker right now and start trading on that one. And then when this, cools down, then close out your positions on Robinhood and get your money out. That's what I would do personally, but everybody's got to make their own decisions. Most people are leaving Robinhood going to SoFi. Yeah, SoFi, that's Chamath. That's a Chamath company with IPOE, I think he's doing. Yeah, I don't know too much about it, but that one could be interesting. Money has never not been exciting. True, true, true. Oh, my boy Maddie's up in here. What's up, Maddie? Hi, Steve. Do you think this might become some crazy version of 2008, except some role reversals? If by role reversals you mean like the retail people winning and hedge funds and Wall Street actually bearing the bag this time, well, that would be interesting, wouldn't it? That would be quite the story. I think I really think what a lot of this comes down to is how the government decides to handle it. Because ultimately, they're going to be the ones who, kind of have the final hammer that they're either going to, swing for retail or swing for Wall Street in that side. They're the lawmakers. They're the regulatory body, and it's really in their court. So there's a ton of pressure from retail though, like more than I've ever seen before. So I guess it depends like how much lobbying there's going to be against us in terms of the government and stuff like that. But it's really, I think it's really in their hands, and the people just gotta pressure them, keep pressuring them like this, and we can hope for the best. Thoughts on decentralized markets? I think that's this is a huge catalyst for decentralization. I really, really think it is. I really think it is such a catalyst for decentralizing a lot of things. Obviously, we can't decentralize everything, but I think once people realize that this movement is a decentralized movement, they will then realize that, hey, all the people from Wallstreetbets, all the people buying GameStop stock will realize that, hey, there's this other decentralized movement going on with like DeFi, Ethereum, Bitcoin, all these cryptos, and they'll get interested in that. I think it's a big catalyst for that type of thing happening. What do you personally use for your crypto a hard wallet? Yeah, I use a hard wallet. That's based on my research, that's what I chose because I wanted it to be the most secure. It may be overboard and for a lot of situations, but the hardcore crypto people say like you gotta get a hardware wallet. Like you can't leave your keys on the internet or anything like that. And another very important thing if you do trying to get into crypto is you're gonna get this like 24-word seed phrase if you do get your own wallet. Never ever tell that to anybody. Never type it in on the internet. That thing is like essentially the key to your wallet. So if that ever gets compromised, you can lose a ton of money. And that's when you see like stories about people losing a ton of Bitcoin or anything like that. A lot of the time it's because somebody ended up figuring out or stealing or getting access to their 24 seed phrase. So be very, very, very careful about that if you do get a hardware wallet or a software wallet. We like the stock. We just like the stock. Like, I don't know what the big deal is. Like, I like the stock. If you guys like the stock, we just like the stock. When did you get that? Hey, my boy Nate's in here. When did you get that dope custom mic? Do you have a freestyle on it? Yeah, yeah, you guys, I'm sure you guys have noticed this by now. Little Cash College logo there. The funny thing was like back when I was first trying to like make videos for Cash College, I had a lot of like videos that I made that I just really did not like and that I just thought were so bad that you guys will never ever see. So part of them I filmed with like this mic setup because I thought this was kind of gonna be the idea. Like I'd have this mic set up, and I'd just be like talking with this thing. But that changed. Obviously, you got like a boom mic and stuff like that. But as for if I freestyle on it, how funny would it be if I freestyled right now? I'm not gonna do it. Not gonna do it. Um, oh, Justine's in here answering questions in the chat too. Hey, thanks. That helps a lot. Oh, did you? Why did Robinhood allow you to sell GME if it was a liquidity issue? Yeah, man, that's why I say. That's why I say that this thing stinks. Like, if you're allowing sells, that's what makes it so much more fishy. Because if you are facing a liquidity issue, or if you are facing an issue with the clearinghouses, or whatever, right? Like, you should be stopping trading of the stock altogether. You shouldn't be allowing people to exit their positions and stopping people from buying them, because that clearly looks like you're manipulating one side of the market. So, yeah, we need more answers on that for sure. 100%. That looks really bad. Oh no, we're screwed if it's up to the politicians. Yeah, yeah, yeah. But the one thing that gives me hope is that, there's kinda like there's there's generational cycles that happen in life, right? Like, I know because we have, like, a human lifespan, it's hard to think about, life taking place over, multi-generations, because we don't live for multi-generational periods of time. But if you see, like, time progressing as a series of generational cycles, you'll see certain trends emerge and then collapse, and then new trends emerge and they collapse. I think what we're going to about to enter is this big phase where a lot of the old trends, of the boomers. That's why the boomers are under so much attack right now. This creaky old infrastructure that's kind of moving on, and these new trends are kind of rising in power and taking their place. That's why we have a lot more young people moving into positions of power, moving into political positions, and they're going to shake things up. I think they will. So that's one thing that, like, a young generation like us has going for us, that there is this generational change happening. At least that's what I believe in, but maybe I'm an optimist. Can you foresee something like GME happen again in the future? Or do you think hedge funds are going to be more cautious in the future? I would say that we really wouldn't, but the funny thing is that when you look back to, like, something like 2008, you would think that, "Oh, like, hedge funds, institutions, they're never gonna be able to do risky maneuvers now, because, like, after that happened, like, nothing's gonna happen again." And yet, here we are with another situation happening, right? So, I think definitely to a degree that history does repeat itself, but it never repeats itself the exact same way, if that makes any sense. So, I don't think there will be something exactly like GME, but I think that we could easily see another kind of clash happening, um, in the investment world, for sure. I think history does repeat itself that way until really deep-rooted problems get resolved, and that takes a lot of time. Is it a good idea to buy into ETFs right now in America? If not, what should I be looking to jump in? I really, really like ETFs. I really, really like them because, they're just so reliable. Like, they're so supported by data that you can buy ETFs today, even if you think the stock market is overvalued, and you can keep buying them, on a monthly basis, a semi-annual basis, whatever it is. And you can do that for the next 10 years, 20 years, 30 years. And you can be, like, really, really, really confident that you're going to have more money in the future than you do today. That's why I love ETFs. If you're picking individual stocks, there's a chance of that happening too, for sure. Um, but there's less of a chance, because a lot more is up to which stocks you pick and what happens to them. And a lot more of that is out of your control. So I think, especially for people who are new to investing, a great way to start is an ETF. And for me, the majority of my portfolio will always be ETFs, always. because they're just so supported by evidence and data that just backs them up and gives you that peace of mind that your money's going to grow really easily as long as you commit to just adding over a period of time. It's really like investing on easy mode. But just make sure that you don't get, if you are planning on investing for the long term, don't get spooked if the stock market does go down. Because here's another really important part about ETFs I'll make really quickly, is ETFs allow you to bet on the world progressing as a whole. Like if you hold a globally diversified portfolio of ETFs, which means like maybe you have like some American ETFs, you have some international ETFs as well. The only way your investments will go to zero is if the world collapses, like if there's some kind of like nuclear Armageddon. And at that point, your ETFs being worth zero are probably going to be like the least of your concerns, because everyone's will be zero and money won't matter at that point. So like the real risk of them going to zero is almost like a non-risk in that sense if you're going to be participating in the stock market. So it's just like it's just like, yeah, investing on easy mode in a really reliable way. What do you think about GME put options? I think that's a good way to light a bunch of cash on fire. No, like you'd have to have like perfect aim with timing that, because I think this is just so volatile that nobody knows what's going to happen, that like I wouldn't do it. I wouldn't do it. I'm sure you could make money off of it if you pick the top perfectly, but the odds of doing that are just, I think they're pretty low picking that top perfectly. So I wouldn't play that game personally. Justine says, "What do you want on your burger?" Yeah, we're getting some Five Guys after this stream. She's probably getting impatient over there. I want some bacon and I want some cheese and some Cajun fries. Yeah, okay. How come shorting is allowed in the US? This can't be done in the UK market. Oh, I didn't know that actually. That's interesting. Yeah, so that's a great question. The reason why shorting is allowed in the stock market is because people see it as part of a healthy market. And the reason why they think that is because let's say you have a company that's a fraud or a company that is a bad business. By taking a short position in these companies, essentially taking the opposite side of the bet of betting on these companies, you can make money when they decline. So people think that kind of creates more of like a healthy market, because if you allow people to essentially expose companies that are frauds or expose companies that are bad businesses and bet against them and profiting off them is the incentive to do that exposing, people see that as a good part of the market. And there's definitely a an argument to be said for that. I guess you can almost kind of think of it like short sellers could be like policemen in a way. That might be a bad way to think about it, but kind of sort of in the stock market. But like it becomes a huge problem when you can short a stock 140% of the float, because 100% of the float is already like you're already in a really dangerous position if that stock goes up. 140% of the float, like that shouldn't be allowed, because that obviously doesn't even make sense in the first place. Like you're using some kind of synthetic financial instrument or mechanism to even create those extra 40% of shorts. Like you're probably re-shorting shares that have already been short. I haven't looked into the mechanics of exactly how it works, but it's just extra leveraged shorting, and it's a time bomb waiting to blow up in your face if it goes against you. Do you think what's happening with GME will permanently change how people invest. Good day from down under. Yeah, I guess time zones are very different. Um, yeah, so I touched on that earlier. I think it's going to. I think it's going to change the future of investing in a big way. I think that kind of what I said earlier. I think it's ultimately up to regulators at this point whether they're going to push big changes in the direction of regulations on retail and basically label retail as unsophisticated investors who've blown up the stock market and are dangerous and we need to regulate them. That's one way they could go with it, which I think would be the wrong way to go with it. And the other way they could go with it is to basically say, we need more transparency on Wall Street. We maybe need more regulations on Wall Street. We need to look at how short selling works in this way on Wall Street. And we also need to help support, educate, and encourage young people entering the stock market, especially through free stock trading apps in ways they have never uh, accessed the stock market before. We need to support them and we need to make sure we can make them a part of this great ecosystem that is the stock market and that allows everyday people like you and me to grow our wealth, to allow us to live lives of like dignity and freedom and happiness. We need to figure out how to get as many people into this as possible in a safe and accessible way. And that's the way the regulations need to go, in my opinion. ARK ETFs. Yeah, ARK ETFs are really cool. They're really cool. I know you guys, probably some of you saw my video on ARK ETFs, where I, basically played out both sides of them, talked about what I really like about them, but also pointed out how investors can tend to behave with ETFs like that. So just, check yourself before you invest in one. Make sure that you know what you're getting into. And if you want to pull the trigger, commit to it. And could work out well. Who knows? Oh, we got a question from my mom. Hi, Mom. I know that BlackBerry has drawn the interest of Wallstreetbets as well. Yes, they have. What are your thoughts on that? So I think they're just like another kind of byproduct of this thing. I believe they had probably a pretty big short interest too. But the thing about BlackBerry is, from what I understand, definitely not big expert on this. I think they actually have some pretty interesting future prospects in terms of some security projects they have going on. So some people are actually looking at it as a long-term stock play, in addition to what's going on right now. So I think some people are actually holding it for the long term. And if you're looking into that, I would look into, I believe it's security. It's security that they are building out that looks interesting. So you could look into that. We got Daniel with the diamond hands. Let's go. Hey, do you have any advice on staying motivated on making videos? Yeah, let me think about that. I want to give you some good advice because it can be tough. It can be tough for sure. Um, I think, see, I definitely get into ruts myself. Everybody does. Everybody does. I think the thing that helps me the most, especially when you get into like a tough headspace, is to zoom out, zoom your perspective out, and look at the big picture. It's easy, especially on YouTube, to get caught up in the small details. You post a video, YouTube tells you, hey, your video performed 5 out of 10, 3 out of 10, 10 out of 10. Like, and that can get you into this like short term thinking where you get too caught up in the details, too caught up in the short term. If a video does well, you feel great. If a video doesn't do well, you feel really bad. You want to have a bigger perspective and look at what's the bigger mission you're trying to accomplish, and am I moving in the right direction for that mission? That really helps me when I think about when I get into ruts and stuff. Am I moving in my main mission, in my main direction? Are things progressing the way they should be on a long-term scale? And they usually are, as long as you know, keep up with it, stay consistent, and just believe in yourself. You sound like a smart ape. Who should we squeeze next? Uh, just let's just focus on GameStop, my man. Do you know how long the hedge funds have to cover their positions? I've heard loads of contracts expire this weekend. Yeah, so a bunch of options contracts expired Friday, and I believe they have to clear by Monday or Tuesday. There might be like a 2-day clearing window. Um, so that might cause like a gamma squeeze. We're gonna have to see if that does or if it doesn't. But a lot of this, like a lot of the information's unclear because one of the biggest issues with this is like there's so much stuff that happens behind the scenes in the stock market that only market makers know the like minute details of how exactly these option contracts have to clear and stuff like that. And so I think we all collectively need to get a better understanding um, of how that's all going to work into this movement we're all behind. Like we can talk about gamma squeezes, we can talk about all this stuff, but I think we need to collectively just like really do a ton of research to figure out, okay, how though exactly are these option contracts going to be um, executed once they expire. Because to be honest, like I don't know the exact mechanism behind that. I believe that shares have to be bought, shares have to get delivered, but also sometimes shares have to get sold, depending on which side of the option that is. But market makers have to do that stuff. But I believe it's a 2-day clearing period on that. So we can see Monday or Tuesday, we may see some pretty big gamma squeezes. Um, in terms of like their short positions, though, short positions on stocks never expire. They don't. You can hold them for as long as you want. But when you're short something, you have to pay interest on it. Because remember, at the start of this thing, I broke down how short selling works. You're borrowing shares, which means you're essentially like taking this loan, right? And when you take a loan, you have to pay interest. So short sellers pay interest while they're sold short these shares. So every day this drags on, they're bleeding money in these interest payments. So, and what they're doing is they're probably just saying, you know what, we're losing less money paying interest than we will if we buy back our stock at this point because that'll send it through the roof and our losses will be astronomical. So they're just waiting. They're waiting. They're bleeding money and hoping that they can wait it out. They can wait it out for the government to step in and come save them. They can wait it out for them to scare retail investors enough to get them to, start selling their shares. But it's a standoff. It's a standoff. Um, do you have any suggestions for videos, books, resources that you feel makes it easiest to get your foot in the door when you're thinking about starting to invest? Yes, for sure, for sure, for sure. Well, of course, you can tune into Cash College and watch some of my videos. But in addition to that, I really like reading books to learn. Videos are great too, but for me, the best books that I read were I think the Millionaire Teacher is a really, really, really good one, that combines, kinda like beginner level, investment, information with also kinda like principles of financial independence. And that's not to say you need to become super hardcore about financial independence, but it kinda teaches you, the importance of, like, how powerful managing your money effectively can be in your life and what kind of freedom that can give you. And so it teaches you how you can do that through the stock market and good personal finance practices. So the Millionaire Teacher is great. Specifics on like ETFs portfolios and why they're great. I really like the little book of common sense investing, breaks it down really, really well. Ton of supporting evidence in that book. I think those are two great ones to start with for sure. Do you think they will try to enforce a 30-day trading halt to slow us down? They might. They might. I don't know. That's a good question. I think if they do, people will be so mad. People will see that as more market manipulation, and will see that as the government siding with Wall Street on this one. So I think it's risky for them to do that, but they might. We'll have to see. Next week, I think next week's when we're gonna see them when we're gonna see like the SEC, the government actually make some statements and make some decisions. I think so. Do you think any regulation is going to be put in place when it comes to influencers moving the market? Example, Elon Musk Bitcoin. That's a really good question. Yeah, Elon moves the market a lot. He moves it a lot. And the SEC's kind of looked at him before, right? With some of the stuff he said where he's moved Tesla stock. I think that's like a freedom of speech question. I think you get into freedom of speech there because if you're not actively telling people to do anything, you can't be really said to be breaking any rules. And if you start kind of choosing what people can and can't say about stocks, like I heard one guy on CNBC or something saying like we should ban talking about stocks on the internet. Like, are you kidding me? Are you That's never gonna happen. Like, you can't stop the internet. Like, people need to understand, you can't stop the internet. You just can't. But yeah, like, I think it'd be too hard to control, unless, like, you're blatantly, like, rallying people to do something and you're, like, specifically saying, "Hey, go do this." Um, I think it's really hard to control that type of thing without undermining, like, freedom of speech stuff. Can you give a quick explanation of gamma squeeze? Yeah. So basically, gamma squeeze is kind of like a short squeeze, except it has to do with options. So the way it kind of works in a nutshell is like um, option. So you have like a chain of option contracts on a particular stock. So let's say when GameStop was trading at like $100 per share, you didn't have options created up to like $300. They weren't even available yet. So when a stock price increases rapidly and like new options have to be created and these older options end up in the money and can expire and stuff like that, market makers have to do a lot of buying and selling securities to basically hedge against the options that they're providing for sale, because they don't want to be exposed naked on the market with their options. And so basically the easiest way to think about it in a nutshell is like it's the same thing as a short squeeze happening, but with options because of the way options work based on like the way market makers have to hedge against them. So it has to do with basically options catching up to the massive price squeezes, and the more people keep buying these call options, the more aggressive gamma squeezes can be. What is a market maker? A market maker is so they're basically their name is kind of like it kind of defines them, right? So in order to provide what's called liquidity to markets. And what liquidity means is how easy it is to transfer basically trades between people. So if you have a market that can be said to be really illiquid, like, for example, real estate. Real estate is an illiquid market, and that's because think of it how easy it is to sell your home. It's not very easy. You have to go through a big, lengthy process. It's gonna take some time. It's gonna take a while for you to turn your house into cash. That means the market is illiquid. But with something like stocks, the stock market is very liquid because it's pretty quick to turn stocks into cash. So market makers are essentially financial institutions like Citadel, who is a part of this story. They provide basically liquidity to the market to allow trades to happen easily. So some of the time that you're buying and selling stocks, you're actually trading with a market maker. And they're just there to kind of sometimes be the other counterpart of that trade so trades can be made. They're there so that trades can very easily be made. And they hedge their positions in such a way that they're always trying to be neutral on the things they make markets for. Because if they had a biased position on one, well, they'd be making and losing money sometimes, right? So they try to be very neutral and they try to just be there to allow trades to happen very easily. That's what a market maker is in a nutshell. They're like a neutral player, a neutral, very large player in the stock market. If you think of this whole scenario happening to stocks like banks, Manulife, doesn't that concern you? Like the amount of volatility is crazy. Yeah. But the thing is, like, I don't know if it would happen with them. Like, I mean, because they don't have those like short positions, right? Like they don't have massive short floats, but I think that the crowd aspect of this thing, like the amount of people crowding investments and then probably algorithms hooking up to that momentum and further intensifying it is a crazy thing that I think is unprecedented. So it could be said to, yeah, be a flaw in the system. Did you read The Power of Habit? I have not read that book. Maybe I'll check it out. I think investing should be more like watching grass grow or paint dry. If you want a thrill, take your dollars and go to Vegas. Yeah, there's definitely something to be said for that. Like, because Vegas can give you like pretty close to 50-50 odds. And sometimes that's better than gambling in the stock market. I also like to be more boring with my investments. What are your thoughts on Neo? I don't think I've looked into it enough to have like a really strong opinion on it one way or another. But one thing I will say is that I think over the next decade, the middle class consumer, or the largest group of middle class consumers, is not going to be in North America anymore. I think they're going to be in the eastern side of the world. I think emerging markets, I think China, I think those countries have an aging demographic. And based on current estimates, by the time 2030 rolls around, that portion of the world is going to be the largest section of middle class consumers, which means, guess what? That's where the main market for goods and services will shift and appeal to. So right now, it's mostly appealing to North America, right? Because we have a very large middle class market. But I think based on estimates and trends, they're projecting that's going to change. So I think paying attention to more international opportunities is, I think it's important. Are you going to do live frequently? I'll have to think about it. Honestly, I had no idea what was going to happen, like going into this. It's actually really cool to see, hundreds of people came out to watch this thing. Like at first, I thought maybe there's a chance there'd be like nobody here. So yeah, I'll have to think about it. It's been really fun and cool actually. So maybe. Do you think it is a good time to short sell GME? No. Don't do that. Don't do that. Don't do it. Don't do it. What do you think? How do market makers make money? They make money by kind of like Robinhood. They sell order flow data to Citadel, who's a market maker. So what that means is like pretend I'm placing a trade with Robinhood right now. I send an order to buy a stock. That order gets sent to Citadel. And what Citadel is going to do is they're not going to process my order first. They're going to process their own order first to buy a stock, the same stock that I was buying. And so they'll buy it first, and then they'll process my order to buy it. But what they're doing here is they're ever so slightly front running my trade, pennies, like maybe even like fractions of a penny. And so they make a tiny, tiny, tiny little profit by doing that. But they do this with very large amounts of money, and they do it incredibly frequently. Like, I don't know the exact frequency, but thousands of times per day for sure. And so they basically skim this little bit off the top of trades in this way, and that's how they make money. And so a lot of Robinhood's revenue comes from selling order data to firms like Citadel. Pretty sure like 50% of their revenue from selling order flow comes from Citadel. Are you familiar with all equity ETFs like XEQT and VEQT? Yeah, I really like them. I think they're a really solid investment to get you. It's an all-in-one solution, globally diversified ETF portfolio. I think they're solid. I'd recommend holding them personally. Oh, did you order them? Yeah. Okay. Okay, I might have to wrap this up soon, guys.
Okay, I'm just gonna go get them.
There's Justine. Okay, couple more questions. Thoughts on Robinhood disabling access to GME and some other stocks and them selling people's stocks without consent as well? Yeah, I have seen some people post that their stocks were sold without consent, which is really, really troubling to see. Really, really troubling to see. You might switch to something else. Yeah. So what I said earlier was that I think if it were me, I would be switching. I would be switching for sure. But if you're gonna switch, what I would say is open up a new account somewhere else first, and don't transfer your account immediately. Wait till this stuff kind of chills out a bit, and then process a transfer. But in the meantime, open up another account somewhere else. That's what I would personally do. Do you think fractional shares will be more widespread in Canada in the near future? I would love for them to be. I think that's really important. I think it's super important to provide more access to the stock market for especially people who have lower amounts of money and who just want to get started. Like trying to buy a share of a company that's over $1,000. Some people don't have enough money to do that, and so they might not be able to buy that company. But with fractional shares, they can. So I would really hope that somebody like Wealthsimple, who seems to be the most, progressive with that type of thing in Canada, I would really hope for them to introduce something like that. I know Interactive Brokers does it. I think they might be the only ones though, if I'm not mistaken. So I really like to see more companies do it for sure, but I think a lot of the banks will be slow. They're just slow. They're slow for this stuff. They're very old, traditional, and they're slow. Questrade and Wealthsimple would be the next best bets for the people who would do it. Yeah, sorry, somebody said they don't front run. Yeah, that's right. They don't front run because yeah, that is illegal, but they do make a small margin on the trade. Ever think about doing a weekly live stream to talk about financial news and answer questions? Yeah, I'll have to think about this because this was really fun. Do you think value investing like Buffett, Munger, Dalio is still a worthwhile strategy? Well, one of the so one of the really interesting things about like factor investing in particular is trying to target small cap value because that's been a long debated thing where they talk about is there still a worthwhile premium in value, like when's the value premium going to come back. It's hard to say, like with I think it tends to it's like a cyclical thing where for a long period of time value stocks will underperform and then they'll have a period where they outperform. It's cyclical. But I think with the increased access to markets that we have with a lot of new traders and stuff like that, and this like crowd effect in the stock market, it might create a much more like socialized investing trend, whereas like fundamentals and like value investing might play a lesser role. I don't know. It's hard to say. I don't think markets can ever fully become detached from fundamentals because that would just be uh, not good. But I think there's still definitely opportunities for value. But in terms of it being kind of in that golden age, I don't know. YouTuber boxing match, Steve versus Gamestop. Hey, I don't know. Well, here's the thing. So like obviously don't have any beef against somebody like that. I like all the other people who make videos. I think it's great. I think it's great for you know, everyone to share all their different perspectives and I learn a lot from other people. And it's great to have an environment where everybody can kind of, share their opinion. We can all learn from each other. But like I also really like boxing. I do. I like that stuff. So like I'd be down to have like one for fun without any like hard feelings. I'd be down for like a boxing match with somebody for like just for fun. I like boxing. Um Yeah, I think yeah, okay, we got some food here. So I think I'll probably wrap it up there. We've been going, ooh, for like 2 hours, jeez. Okay, yeah, I think that's gonna be it for this one. Thank you all so much for coming out. This was definitely more, I think, people than I had anticipated. So many questions came in. I was doing my best to answer as many of them as I could. I hope this was helpful for you guys trying to understand what's going on here, why this is important, and how this can affect things going forwards in the future. Um, Probably be putting out some more content on it this week. And yeah, for everyone who's in, keep those diamond hands strong. Let's see what happens on Monday. Let's see what SEC other people have to say. We'll just keep watching this crazy thing unfold. Yeah. Nate's trying to make me freestyle. I'm not ready. That would be so embarrassing. I would so embarrass myself. Need like, I need like a couple drinks or something first. Okay, guys. Peace out. Have a good night. Love y'all.